Hi everyone. Thank you for joining us for our workshop today. Today we are going to go over balling on a budget and learning how to build credit. I am Jasmine Posada and I am here with my colleague Melissa Macias, and we are both representatives of the STEP Scholars Program. And we are very excited for you to tune in today. I'm going to pass it over to Melissa and she's going to give you over an overview.
Hi everyone. So today we wanted to focus on two different aspects about financial literacy. So we decided to go over both budgeting and building credit. As undergrads, I feel like it's a bit different going over these two topics because we're mostly working like part-time jobs. But we still want to make this presentation applicable to you as an undergrad. So I will be going over budget planning as an undergrad, and Jasmine will be going over building credit. And we'll also be giving resources throughout the presentation to assist you with these two different aspects. So what is a budget? So the definition of a budget can be kind of, how would you say it? It's kind of, there's like different definitions to it. Like some people think that it's just like cutting down money from your expenses, but in reality, a budget is analyzing your expenses over a period of time and just estimating what you can spend and ensuring that you're able to put money in savings and that you're able to pay off your bills. So it's mostly analyzing, not cutting down expenses, not the action of cutting down expenses. Um, so a budget is also kind of like a technique that you use. Budgeting can look different for everyone. Some people may use like an Excel sheet to budget. Some people may like write everything down and make sure like they're paying their bills first, and then from there on making plans on how to spend the rest of their money or invest, save the rest of their money. So it's just a technique as well. And like I previously said, it's not the action of spending less or cutting down your expenses. It's more like a process of analyzing and techniques that you use to do that. So as an undergrad, we often are in the midst of like, how do we begin budgeting? Sometimes we have that connotations of being a broke college student. Um, but how is it that you can budget if you're a broke college student? So a lot of us, I would say, some students do have a part-time job as undergrads. So in that sense, you can begin budgeting even if you're working part-time, or not working part-time but you're receiving some form of financial aid, reimbursements. Just budgeting that money in itself can be a budget even though you're not receiving some source of income. So there's two different recommendations where you can budget. We actually found this resource, this website here, cicmoney101.org, that they offer a free worksheet and you fill it out. So I wish I can show you guys, but if you guys go to this website, just type it in and it actually puts down your expenses in different sectors. So you can put in your like source of income as one. How much do you spend monthly on like groceries? How much do you spend like on luxuries, bills, and everything? And it just sorts it down and puts it on an Excel sheet, and it exports it for you. So that's just minimizing the hassle of having to even do the Excel sheet on yourself and like thinking of the exact way to do it. Like I said, budgeting is different for everyone, but this is just one resource that we wanted to put out there that can help everybody. So once it exports to your Excel sheet, it kind of looks like this. So it actually does it for you. So it'll have all the months across, and then it'll have like, of course, some of these are not applicable to college students, but you just put what's applicable to you. So for example, some college students may not have a mortgage already or like home renters insurance. So you can just go out and delete all of these or just put in what you do pay Um, and it breaks it down all for you. So you can see even if you don't have a salary or source of income coming in, if you receive like a refund check, you could put that in or family assistance. I know personally myself, I did receive like family assistance my first year. So that was kind of like my money that was coming in. So this is just a resource that we wanted to share with you all so you can budget and use this as your technique to begin budgeting itself.
I think I'm gonna use it myself. I didn't know about it, but I think I'm gonna use it. You convinced me.
Yeah, it just minimizes the hassle. Like really recommend it. I tried it out myself and it was pretty cool just to like see it. And again, it's not, it minimizes the hassle of just like even thinking of what sections you should do or what you shouldn't put on there. Um, But I did want to go over why it's important or like how you can balance your budget. So one of the things you can do is make changes to your monthly expenses as you see fit. So you can start off by making one small change and then seeing how that works out, or even like in a month. Like I said, it's not cutting down expenses, but if you see that there's something that like that you don't need and that money can be used for something else to pay off like your bills or something, you can try that out and see how it works. Or maybe you can, instead of buying that item like every month, you can buy it like every few months. You don't have to, it's just kind of like minimizing but not like cutting down your expenses, just like, I don't know how to explain it, changing your expenses around but not minimizing. You could also make a weekly or bi-weekly budget, so you can plan your week according to your budget to help envision your spending. When I think of this, when I was small, I actually had this trip with my family and we were on a budget. So our family had given us, it was like a few $100s to go on vacation with my cousin. So we spent like a whole month over there and we had a budget how we were gonna spend that money in 4 weeks. So we wrote down all the things we were gonna do, how much was each thing, and we just made a weekly plan on our spending. And it actually like helped out to have that plan written, because we could always look back at it and say, oh, do we need this? No, we don't. So we would just like go based off like our plan, and we actually had enough money for our whole month vacation with my cousin, and there was three of us. So I would recommend like making a weekly or bi-weekly budget, and I still do it now. Maybe not as like, I don't write it down anymore, but I do like analyze my bank and make sure that I'm not overspending or underspending as well. Like I don't want to cut down too much on my expenses and not like give myself something every month. And you also can prioritize your needs over your wants. So I always recommend like make your payments on your bills first. Like if you have a car payment, you have like health insurance that you need to pay every month, or like your rent. As college students, a lot of us have rent if you live off campus. So make sure those things are paid off first before you spend on a want. So of course you're not going to spend on like a pair of Uggs instead of like paying your rent first. But that's just like a recommendation on like how to budget and how to make sure you're not overspending.
Yes,
So
Uggs. We love Uggs.
yeah, and we also wanted to go over like what a need is. So a need, I would see it as something essential, something need to survive every month, or like something that is required of you to pay. So again, like I said, this is like a rent, your rent, a car payment, phone bill, tuition. I know we have like the deferred payment plan on campus, so that would be a need, because like without paying that, you can like potentially be dropped from your courses, or like something bad could happen, or even like your credit could be hurt by not making like a monthly payment. So that's what a need is. And I decided to put actually like as a picture for this presentation, I decided to put a calendar because it just makes me think of like when bills need to be paid. Like, rent is going to be paid around like the 1st or the 31st, around those days. So that's what a need is. And then a want is something that you desire to possess, and not something that's essential every month, but something that you decide to do or partake in. So it's not just shopping. It could also be like a trip to the bowling alley, um, or something that can wait for another month that you don't essentially need. And this is not to say that you shouldn't have a wants every month. It You can still go out bowling. You could still go on a shopping spree, if you think it's in your budget again. But I always try to tell myself, like, don't have more wants than needs in a given month, because sometimes you'll think like, oh, $30 just to go to like to dinner with my friends. But if you go to dinner with your friends like 5 times, or like every single day you eat fast food, that's when you kind of have to like slow down on your wants and just think like, do I really need it? Or can I cook at home today? Or is there something at home I can make instead? So always just like keep a lookout on your wants. And sometimes, I know it's happened to me before, but sometimes like when I get something that I want and I know I don't really need it, I tend to not look at my bank account because I don't want to like see that I made that purchase, or that I've made like three wants in a month. But I would say it's always good to keep a lookout to your bank account. Even if you like spend it, or if say you don't want to look at your bank account just because you've made too many expenses, I would always say it's good to do it, because you never know if someone will get hold of your like card information. It's happened to me before where my information was stolen and I was able to detect it. So I think it's always just important to keep a lookout on your bank account, like at least a few times a week, if not more. And I also did want this graph that I found on the internet, but it's basically a breakdown of like what's normal. And again, this looks different for everyone, and it's not like you should stick to this, but it's kind of a percentage of like your monthly expenses. So typically, like a person would be um, spending about like 33% on housing, um, and 20% on transportation, 13% on food, and the rest is like kind of like I would say wants, like charity and miscellaneous, clothing, entertainment, um, education. Those are kind of like other expenses. So it's just kind of like a breakdown you can go by of like how to spend your money every single month. So of course you're not going to pay more on something that's a want than like a bill, for every single month. And now I'll pass it over to Jasmine.
All right. Thank you, Melissa, for those tips and advice. I definitely say that if you can't look at your bank account after buying something, that's definitely a want because you do not want to look at that. Okay. So, hi, everyone. So, another word that's thrown around here and there is credit. And some of us are even scared to even think about like what credit is, and a lot of us do not know what it is. So it's going to be a brief presentation, but if this is something that y'all want to hear and learn more about, let us know in the comments, give us feedback, so maybe in the future we could plan another workshop that might be more specifically tied on credit and go more into depth, because I'm just going to go over a brief presentation, so it won't cover like, if you have more questions, then for sure email us and let us know, so maybe we could have a future workshop on this. Melissa. All right, so here I have a definition of what credit was. I got this from, I think, one of the crediting websites. It says that credit means receiving something of value now and promising to pay for it later, often with the finance charge added by the lender. Essentially, what it's saying is you're buying something, but you're gonna pay for it later on. And I'll go more into like what does it mean like building your credit and all that stuff. Okay, so why get a credit card? With a credit card, you could potentially buy almost anything. So this could go from small little things like buying things from the grocery stores, the stores, to even buying a house, a car, etc. It's fast and convenient. Most credit cards actually do not ask for like passwords, which I know debit cards usually do, but credit cards usually don't. You just either put your chip in or you slide it. It's really fast, convenient. You got added on your virtual wallet. I know iPhones have virtual wallets, so you could add it on there as well. And then there's benefits. So what this means is with the different types of credit cards, you get different awards. For example, you could have a credit card tied with a gas company, and that company, for example, says that for every gallon, you're gonna save a certain amount of cents. So that's an award or a perk that you might get. There's also another type of credit card that might say, okay, so let's say you want to specify on online shopping. So every time you buy something online, you'll get money back, or you get a certain percentage back of every dollar you spend. So that could be another award. And there's different types. There's travel credit cards. So every time you buy an airline ticket or buy something with an airline, like you get money back from that as well. And there's a bunch. There's also dining cards. So depending on which type of credit cards, there's some credit cards that are also generalized. So for every dollar you spent, you get a certain percentage back. And that's just for anything. It could be airline, food, groceries, essentially anything. And then another reason is to build credit. And this is important, especially, for example, I know here, UCM students that live off campus, sometimes when looking for a place, your landlord might ask if you have credit. And so it's good to, this is something, building credit is something good because if they see that you have credit and it's not so bad, they're more likely to let you live at that place or buy a car if you have a good enough credit, as well as buy a house, which I'll go more into later. All right, so here I go. Like I was saying, it's important because um, it says good credit is essential throughout your life, wherever you want to buy a house or a car, like I was saying, get insurance, or maybe even pay less of a deposit for utilities. Um, Also, when applying for a credit card, it's this is the most easiest way to establish credit. There's other ways to establish credit besides a credit card, but the easiest way is having a credit card and building credit from there. Um, it says that you could become an authorized user account holder on someone else's card, or you could apply for a secured credit card or open a store or gas card. And in my following slides, I'll explain the difference between a secured and an unsecured credit card because there is a difference. And then the downside is that building credit without a credit history is not easy. It takes time, and creditors aren't keen on extending credit to someone without a credit score because they don't know the level of risk involved. So, for example, for students, if you're new to applying to a credit card, it is very highly if you don't have a steady income or have a job, for example, it's going to be really hard to get accepted to get a credit card. You might get denied your first few times. Speaking from experience, I got denied twice. I got it the third time, but it was because I was just a student. I actually didn't have a job at the time, I believe, but I was able to do it with my parents. So that is something you could do as well. Um, but once you do get a credit card or you get accepted, it does take time, but I think the rewards after are, I guess, rewarding. So stick through. All right, here we go between a secured and unsecured credit card. Essentially, the difference between these both is that with a secured credit card, you're putting down a deposit for that credit card, whereas an unsecured card, you are not putting down any money. So essentially, let's say you apply to a credit card, they'll give you credit. You don't have to put any money down, whereas a secured one, you do. And but for the most part, they work the same. But most people start off with a secured card just so I think for beginners, I think this is the way to go, having a secured card. And if you, let's say, start not paying your monthly bills on time, which hopefully you're not, hopefully you're responsible. That deposit that you put down kind of has that little grace for you. It doesn't pay for it, but it's like it serves as a, I guess, a cushion for you. um but for the most part, most credit cards that you just apply to, they're unsecured. It doesn't mean that it's not safe. Don't get it confused that, oh, it's not secure. No, no, no. It just means that you're not putting down a security deposit. And when you apply to a credit card, they're giving essentially the credit. And this is actually most the case that if you already have a credit card, you're most likely to get offers through an unsecured security credit card than a secured. Secured, I feel like, is more for beginners that are like starting off and they want to build credit. So if you're in this position, I would say secured is the best way to go if you're starting off. And then after, once you kind of establish credit, you're doing well, you're paying off your monthly payments, then I would say like applying for those unsecured credit cards is probably the next step if you want to apply for more than one credit card. And some similarities is that they both sorry sorry, they both require monthly payments, so that's essentially the same. And they both report your payment history to the three major consumer credit bureaus. So this is saying that um, you're essentially getting the same score, whether it's secured or unsecured. It's the same thing. So there you go. All right, so building credit. So once you have a credit card, use it carefully. Don't go spending. My mom always says, don't spend more than you can pay off. So that means, let's say you have $100 in cash and you have $100 in credit. I would say, because you have $100 in cash, you could use your 100 credit, but make sure you pay it off with your money as soon as you can. Um, don't I always went off by the rule that don't use more credit than money you actually have, because that's where it might start getting rocky. And if you don't pay those, depending on your interest rates every month, and if you don't pay it on time, it could affect your credit score badly. And it says your goal isn't to pay interest or charge a significant amount. Your credit score isn't based on either. And be sure to stay well under your credit limit. Your credit score may be impacted if your total debt compared to the total credit available, known as your debt to credit ratio, is over 30%. Just essentially what I was like saying. A couple of minor purchases a month and on-time payments will produce a consistent positive feed on your new credit report. So making little purchases here and there and make sure you're paying them on time is what's going to help boost your credit card. I know some some of us might want to go crazy and just okay, like we have $1,000 in credit, I'm gonna go crazy. But no, essentially you're gonna have to pay that back. And depending what type of credit card you get, it's gonna you're going to have different interest rates. I know some credit cards give you a grace of, I want to say, like a year and a half of not paying interest. But then after that period of time, like you get charged every month. So just be careful with your interest rates and making sure you pay on time every month, or pay your minimum payment every month. All right. So there are tools to help you monitor your credit card. Yes, you'll be able to quickly see if you've developed any bad credit habits, such as making payments late or carrying high balances. And this is going to reflect, or you'll notice this with your credit score. If you see you have a not so good credit score, this is probably a sign that you're exceeding your purchase limit, as well as not paying your monthly payments. So this is definitely a sign, and it's good. I'll go over some tools that you could use to make sure you're maintaining that good ratio, that good debt to credit ratio. And also, misusing your credit card can land you with a mountain of debt. You know that. And so building credit can be much more difficult the second time around. So if you discontinue a credit card and you start another one, it might be a little harder to build that credit just because you ended on a bad note with your first one. So you don't want that to happen, because you'll also have a difficult time applying for a second time around. So just be careful with your first one. Okay, so here's a small pie chart of the different scores of credit. So we start off with the top right, with it says from 300 to 499, that's poor. And then you go down and you start seeing like passing 660 to like the 700s. Like that's a good score to have. And then 780 and above, like that's excellent. And I just want to say that this is only one scale from this website called Experian. Excuse me. Um, with different credit running websites, they're gonna have different scores of what's good, what's excellent. So I would definitely pay attention to that. This is just one example of one credit running website, which is Experian. This is what they count their credit. And I know there's other ones that, let's say a 600, like I know in here it says it's fair, but other ones might be good. So just pay attention to that as well. And then in my next slide, I believe I have another resource. Yeah, so another resource I personally use is, depending which bank you have, I have Bank of America, and through Bank of America, it actually shows you your FICO score, which sort of reflects your credit score, but it's not exact. It's essentially like I want to say like it's not your actual credit score, but it's like telling you like this is what your credit score might be. And it helps me monitor it every month. If I see that I have a drop, or if I went up, I'm like, okay, I'm doing well this month. Or if not, I'm like, okay, I probably need to go on a budget, like Melissa was saying. It also allows you to, also on the Bank of America app, they also have a budgeting thing. So I recommend you downloading the app if you have Bank of America. And then I do have Chase as well, and it also shows your FICO score. And there's also a section where you could budget your money. So take a look out for which banks you have your credit cards with, because in the app itself, there's some tools that you might be essential for you to use. And then this is another one I use. So before I financed a car, I wanted to see my credit, and I actually use Experian. And I went in buying a car knowing my credit. I think it's a smart move to make, so you know, I guess, where you could get a deal with the car. Essentially, if you have good credit, you could get a better deal on a car, and they trust to finance you with the money to buy a car. So if you're looking, if you're that's just me. If you're looking to buy a car, I would say you should probably look at your credit so you can see where you are. That's something they'll do at the car dealer too, but I personally wanted to know my credit score. So I went on here and it's free. It tells you what you have. And so I went in kind of confident knowing what I had. And this is just some of the tools I use. I know most of the time I use the bank ones because I feel like they're the most accurate representation of my credit. So I highly recommend using your bank, whether it's Bank of America or other banks. And then Experian is also a really good website to use. And this is the one I've used. And actually, my car dealership actually ran my credit through Experian as well. So yeah, I don't know if Melissa has another site or another resource that she uses, but yeah, that was it on my part. Thank you, everyone. I'll pass it to Melissa if she wants to say any words.
Yeah, I just wanted to say thank you, Jasmine, for presenting the portion on credit. And we hope that, although like it may seem like kind of a fast presentation, but we hope that it helps you out in some sort of way, or like you learned something from today's presentation. And we want to thank you guys for watching today's video.
Yes. Thank you, everyone. Make sure to follow us on Facebook, on Instagram. That's where we post these type of workshops, as well as our YouTube video. This is gonna go up on our YouTube video, so give it a thumbs up if you liked it. Leave a comment. Yeah.
Bye, everyone.
Bye.